Bajaj Auto is going to be one of the first few auto companies to deliver their first quarter numbers, and it's going to be a very interesting quarter because it was the June quarter where a bulk of the lockdown really was in place, and hence there is going to be a significant impact on Bajaj Auto's Q1 numbers as well. That phased unlocking was seen only in the second half of Q1 FY21. So with a 64% degrowth in volumes on a year-on-year basis, Bajaj Auto's performance is definitely expected to be a weak one. So ET Now's poll expects the top line to drop by 60% on a year-on-year basis at roughly about 3,000 odd crore rupees, or just a tad bit over that. The margins are seen at 11%, which is a 440 basis points compression compared to the corresponding quarter where margins were at 15.4%. That's basically during the same period last year. What are the reasons for this compression? Well, of course, you do have that magnificent or that huge drop rather on the top line of almost about 60%. But it's not just weak operating leverage. We're also looking at not so great product mix coming in for Bajaj Auto, and then of course the lack of profit margin on the back of that BS4 price hike. However, that one small silver lining that could be said for Bajaj Auto and various other auto companies as well is the fact that there will be better exports contribution. There's favorable exchange rates as well, and that is something that perhaps could cushion some of that margin compression, or rather limit it compared to the corresponding quarter. It'll lower the impact as well of that negative operating leverage, which will come by obviously when we are talking about a 64% drop in volumes on a year-on-year basis. Furthermore, on the bottom line, the ET Now poll is expecting the profit after tax at 535 crores, a 52% decline. Now, the reason why the bottom line, yes, of course, there is a big degrowth, but it's still a bit limited compared to top line and EBITDA degrowth, is because we're expecting higher other income. So that could be one line item that will cushion the bottom line. 535 crores is where the profit after tax is expected to be seen. What we would perhaps watch out for is management commentary on the back of any guidance that they could give us, even three-wheeler segments, in fact, for that matter. One of the key factors is that there is also lower contribution from three-wheeler sales, which may lower the benefit. That will be watched out for. If there's any down trading as well, I mean, we are expecting the June quarter to see an adverse product mix. So maybe that impact of down trading could hurt margins as well. What's the outlook on the key export markets? Of course, along with an update on Bajaj Auto's domestic demand, and also if they're able to get back to those old production levels, if supply chain, if labor as well, how much of a problem was it in the June quarter? What's it looking like in July for both the factors, demand as well as production?